Good day. Super excited. How are you doing? My name is Mayowa, Owolabi, and you're welcome to my YouTube channel. I'm really pumped up about what I'm about to share with you. And one of the things that really changed my exposure in the market is when I came into the supply and demand trading zone. I used to trade. I got exposed to Forex in 2009. Opened my first life account 2010. Was in it actively for 3 years. Had a long break. Came back again 2017. And in 2018, one of my mentor, who is amazingly successful, asked me, in the world, who are the people making money in trading? And who are the people trading? So I mentioned that we have the retailers, which we are. Then I mentioned that we have the institutions, and he said to me, we have also the government and all of that. And he said to me, who are the people more consistent? I said, is the institutions. Okay. Who are the people that really lose money? I said, is the institution. Who said to me, can I understand how they trade? I said, yes. And he said, what am I trading currently? I said, more of retail approach. Then he said to me, if I continue like this, I will not be successful because I have to do things the way the successful people do things, okay? And that changed my approach to trading, and I went in big to crack the institutional trading, which is why with my years of experience, I was able to found institutional trading concept. It's a collection of what I have studied the institutions do and the approach of trading. Okay, one of the important, or one of the component that is important taking decisions when you want to trade like the institutions is to trade supply and demand. So don't take it for granted whenever you see a video that talks about supply and demand. If you are new to trading or you're already trading it, you want to check it out and see if there's something you can add up to your experience, okay? So this will help you. Get your pen, get your note, and make sure you have the knowledge. So before I go into details, if this is your first time watching my video, make sure you subscribe and click on the notification bell, so that you will not miss the next time we upload videos, so you would not miss those videos. And I want to also make sure you comment below if this is adding to you and what you learned and how this has been helping your trading, okay? And if you still have any question, feel free to also comment below and we're going to be good to go. So let's get to the screen right now. So we have supply and demand. And what supply and demand is all about is you understanding that this is built on economics, the so-called economics. So you cannot talk about the financial market without talking about the fundamental, which is not fundamental as news, but fundamental that makes market, which is economics. And in economics, you remember we're taught supply and demand, we're taught inflation, we're taught all of that. Now, when it comes to this, you must understand that supply is supply is where the goods are delivered or requested for. And demand is where people are requesting for the goods. So we have S as people requesting, okay, for the goods, the available goods that people can access, and demand the request for the available goods. Good. So supply is always when you are to what? Sell. Demand is where you are to buy. Okay? Demand is where you are to buy. However, when it comes to supply, you want to always request for a discount. Okay? When you are also buying, you also want to request for a discount. Okay. So let's get through to the board. Don't forget, you are selling at supply, you are buying at demand. Good. Next one I want us to understand is that we have two candle patterns for supply. We have what is called swing, and we have what is called continuation pattern. Now, swing, as the name implies, means that that is the beginning of a major move or a trend. Continuation pattern, as the name implies, means that you are following the trend that has already been created by swing. Good. So we have two types of swing. We have valley and we have peak. So when it comes to valley, valley is where you want to sell, buy from, and it has a V shape. Peak is where you want to sell from. Now, I totally recommend people to always enjoy swing. Why? Because you make more profit from swing. So when you have a valley, you buy from there. When you have a peak, you sell from there. Now, the next part is, since we know we have valley and we have peak, in the markets, you want to be able to see this at every point in time. Because we are dealing with candles, I would like to interpret this value as what is called a drop, which is a red candle, a bearish candle, a base, which could be any color, and a bullish candle. That is called value. Now, this gives, for peak, which is supply, you want to see a drop, a base, a rally, a bullish candle, a base, and a drop, which is here, which is bullish. So what do we have that interpret this? We call it rally, base, we have this as drop, which is a bearish candle. Then we have it as base, which is the middle candle. Then we have this as rally, which is the third candle. So DBR. So this is drop, the red candle, base, any color, rally, bullish candle. So for a peak, we will now have the opposite, rally, which is a bullish candle, base, which is always the small candle in between, then drop, which is the new one here, the bearish candle here. So this is what forms a demand. This is what forms a supply. Supply, demand. Good. So all you need to do is to come to your chart and ask yourself, where is drop, base, rally? where is a red candle, followed by a base candle, followed by a rally candle. O, which is bearish, bullish. Where is the supply, which is, where is a bullish candle, where is a base, and where is a drop. So whenever you see this, you must understand that we are going to be dealing with the base. So this is your drop. This is your drop. Okay, this is a rally, a base, and a drop. So this is rally, base, drop. So if you want to trade, you are to trade the base. Rally, base, drop. You are to trade the base. So this is where you will put your what? Your sell limits. This is where you will put your stop loss. So likewise, for a buy, you will have a drop, which is a bearish candle, a base, which could be any color, and a rally, which will always be a bullish candle. So this place becomes your buy limits, and this will become where you will put your stop loss. So every time when you come to the chart, you are asking yourself, where is the swing and where is the swing and where is the peak, peak, which is the sell, where is the value. So you are trading value, you are trading peak. So in candle interpretation, you are trading rally, base, drop, and in here for value, you are trading drop, base, rally. So let's go to the chart and identify all of this now, for example. Good. So when you see this, you will notice that you have a rally, a bullish candle, a base, which could be any color, and a drop. So this becomes rally, base, drop. But in this scenario, we have about 4 days in it. So this becomes, to pick the base, and this becomes the stop loss. So your sell limit here, your stop loss here. Okay, there's a school of thought of people using the week. Okay, people using the week. However, the two is right, because sometimes the market uses the week, sometimes it uses the body. Okay, just practice and identify the one that suits you as a trader. So personally, I use body, and in some scenarios, I use the week. Okay, good. So this is a what? A peak. You can see another one here, rally, base, drop. So this is it, another one. So this is your sell limit. This is your stop loss. This is another one, rally, base, drop. This is it, and this is it. This is another one, rally, base, drop. This is it, and this is it. So you can see that the market always have a way of coming back into it and drop. This is still, market has not touched this place. Market has a way of coming back to it and drop. So we must understand how this works. So if you're dealing with buy, this will be your drop-based rally. So this becomes your buy zone. So the market comes into it. The market comes into it, and the market went up. So that is what is called, this is called supply. This is called demand. Don't forget, drop, base, rally. Then this is called rally, base, drop. So supply, supply, demand. So you sell here, you sell here, you buy here. So you sell at peak, you buy at V. So all you need to do to get this better, go to your charts and identify this, especially on higher time frame. See guys, there's no gimmicks, just practice, practice, and you will get better at it. I'll look forward, because I don't want this video to be longer than this. In the next video, I'll take you through part 2 of supply and demand. Don't forget, what did we learn? Supply and demand. We said there are 2 types. We have the swing and we have the continuation pattern. Then under swing, we have the peak and we have the value. The peak is to sell. The value is to what? Is to buy. And I told you that your entry will be on the base. Your entry will be on the base. The entry will be on the base. Remember that? Good. So repeat that. Let me get your feedback. Go and practice it. Show me, tell me how many times you practiced. Show me, comment below how many times you have practiced. Tell me what you noticed. And I look forward to your success. My name remains Mayowa, Owolabi, and I'll talk to you soon. Cheers.